Imagine you hand over your money to someone you trust, expecting it to be safe, only to find out they're using it for their own gain. What if I told you that's exactly what happens when you deposit your money in a bank? In this video, we're going to uncover what banks really are, what they do with your money, and why they might not have your best interests at heart. Stick around, this is something you don't want to miss. Let's start with the basics. What are banks? At their core, banks are financial institutions that offer a safe place for people to store their money. When you deposit your money into a bank, it's credited to your account, and you can access it whenever you need it. Banks also offer services like loans, mortgages, and credit cards. They're an essential part of our economy, helping people and businesses manage their finances. But here's the part most people don't think about: what happens to your money once it's in the bank? The truth is, it doesn't just sit in a vault waiting for you to withdraw it. Banks take your deposits and use them to make loans to other people and businesses. They might lend out your money for someone to buy a house, start a business, or even for large corporations to fund their operations. And here's the kicker: they charge interest on these loans, which means they're making money off your money. While they're paying you a tiny bit of interest on your savings, they're earning much more by lending it out at higher rates. It's a business, and like any business, the goal is to make a profit. So, why is this a problem? The issue is that banks are focused on their profits, not necessarily your financial well-being. For example, when banks make risky loans or investments and things go wrong, it's your money that's at risk. Remember the 2008 financial crisis? Banks made a lot of bad bets, and when those bets failed, it was ordinary people who suffered the most, people who trusted banks to keep their money safe. And there's another issue: because banks only keep a small fraction of deposits on hand. This is called fractional reserve banking. They don't actually have all the money that people have deposited. If everyone decided to withdraw their money at the same time, the bank wouldn't have enough cash to give everyone what they're owed. This creates a fragile system where your money is only as safe as the bank's latest decisions. So, what can you do to protect yourself? First, it's important to understand that while banks are convenient, they're not the only option for storing and growing your money. Consider diversifying where you keep your money. Look into other investments like stocks, bonds, real estate, or even cryptocurrencies. These options can provide a hedge against the risks that come with relying too heavily on banks. And remember, financial education is your best defense. The more you know about how money and banking really work, the better decisions you can make to secure your financial future. Banks might be an essential part of our financial system, but that doesn't mean they're without flaws. Understanding what they do with your money and the risks involved is key to taking control of your finances. If you found this video eye-opening, give it a thumbs up, share it with your friends, and hit that subscribe button for more content that empowers you to make smarter financial decisions. Thanks for watching, and I'll see you in the next video.